In today's economy, we need real estate to keep afloat. People have taken on massive levels of debt in order to afford these homes. If they decline in price, it would make the subprime mortgage crisis seem like nothing. And yet here we are today, on the precipice of disaster. You came here for the truth, so let me unveil that for you. Today we are going to look at real estate prices. I've shown you the bubbles that have appeared all around the world. Since the subprime mortgage crisis, homes have risen in the US. Before that, we had seen this bubble going on, in some cases for decades, continuing today. But I wanted to highlight the places where real estate has actually fallen recently. So let's begin with this. Global real estate in total is 217. But what do you think that is? $1 million, $billion, or is it trillion? It is $217 trillion. If I compare that to equities at 55 trillion, suddenly it doesn't seem that big. We have homes all over the world. When you add them up, you get this amount. And think about it. All of the jobs and how the economy is really relying on real estate. Power that comes into the homes. All of the commodities that are used in building these homes, whether it's copper wiring, whether it's your flooring, paint for the walls. Then you have all the people that are involved. Electricians, people to install the tiles, people to get you your kitchens done and your woodwork and everything else. So all of that's involved. Then we have the business side of the whole equation, where you have the real estate agents, the mortgage brokers, the banks, the inspectors, so on. All of that is involved. And then we have the speculators, which are on top of that. And there's various levels of speculation. We have those who are simply buying and flipping homes. Okay. While I would want to interject with that point here is that if you're going to take a home that's in a good area, it's not so good, you buy it, you fix it up, I believe you're doing a service to the community. And as a result, if you're rewarded with some money, then that's great. But we can see that it's a form of speculation. But I do think that that can be a great, profitable business. And it actually serves the community. Okay, so you have that type of speculation. Then you have people who buy in knowing they really can't afford it, but hoping that this price will go up in the future. They'll have some appreciation, and then they can use the equity. And there's also the people who speculate based on the fact that I believe that the houses will continue to go up in price. Therefore, I can take this here. I can use the equity to buy my new car, a boat, so on. Okay, there's secondary mortgages, home equity line of credits, and so on that are expanding. We see that. And then we have the ultimate level, which is the banks. They take all of our mortgages, they package them up, they securitize them, and they call them an investment. So they take our mortgages, even though technically it should just be a transaction between you and the bank. They take those, package them up, and sell them off in derivative products. That is speculation. So imagine how important real estate is. And if the value comes down, how much of a mess that would make. So let's get into some examples today. I hope you appreciated that little bit of information, my rant for the day. My friends in Australia, let's talk about you. On the last video I did, you had brought me several examples of how prices have come down. I wanted to show this here, and you can confirm some of the details. Australian home prices fell at a faster pace last week, led by declines in all mainland state capitals except for Brisbane. They talk about the percentages, and actually if you look at it, it's not that much. But let me go a little further into this. If you look at the 12-month change in Sydney, okay, we're talking about minus 5%. A decline of 5% year over year in real estate, that's actually pretty significant. If I said a 5% in, some stock, 5% is not that much, but in real estate, it's a fairly significant amount. Of course, we've come up from, such a much lower level to today. So 5% doesn't necessarily take off that much from the total it gained, but it is something to watch. Okay, we can see that Perth has also experienced a fairly significant drop, minus 2.1. Okay, and if we take them all together, it is also minus 2.1. That's the 5 capitals. All right, so, and by the way, year to date, we see that Melbourne has come down a little bit here, minus 2.3%. So I wanted to bring that to you. That's Australia. If we look at some other places, it is also very, very significant. The party's over for now for those sitting on Vancouver's most expensive properties. Prices at the top end of the market in the Canadian city plunged 7.6% in the 6 months to March, making it the world's second worst performer during that period. Only Stockholm, my friends, in Sweden, only Stockholm did worse, falling 9%. Now that is a big drop. Toronto rose 6%, and the top gainer was in South Korea. So we see these here, different things happening. The luxury markets, some are doing well, some are not, but I wanted to bring that to you. I think it's important to understand. There's some more details here. If you're interested, you can pause the video. All right. Real estate sales in Manhattan plunged. Can you believe this? 25% in the first quarter. We're talking about Manhattan. I was covering this over the years, talking about Manhattan. Look at the prices. Look at how the square footage keeps shrinking, but the prices keep going up. And now, here we are, sales plunging 25%. That's in the first quarter from a year ago as the new federal tax law, stock market swings, and a glut of luxury condos spooked buyers. That's what they're saying. I also think that we have the pressures of interest rates, which nobody wants to admit. And so we can just quickly cover this. Sales in the first quarter posted the largest drop in nearly a decade and reached their lowest levels in more than 6 years. Okay, so we've got definite pressure. The average sales price dropped 8% compared from the same quarter last year. Okay, so we've seen significant price drops, sales are down, inventories are up, and this goes for a lot of cities now. And that brings me to essentially the final point I want to make here. A lot of people believe that prices can rise forever. If they buy in today, even if prices go down, they'll be fine. Well, I want to bring this perfect example. It was brought to me by a subscriber, and I wanted to bring this to you to make sure everyone understands a very real example. This is back in 2008, okay? This article. A town that drowns in debt as home values plunge. Mountain House, California. This town, 59 feet above sea level, is the most underwater community in America. Because of plunging home values, almost 90% of homeowners here owe more than their mortgages, 90% of their mortgages than their houses are worth. That's the highest percentage in the country. The average homeowner is underwater by $122,000. And a lot of people would think that that's absolutely ridiculous. Especially if your home costs, let's say, $200, $300, even $400,000. If you're underwater by $122,000, that's huge. Now, if your home costs, $3 million, maybe it's not so significant. I won't get into more of that article, but I wanted to show you something right here. Due to the plunging housing values, nearly everyone who lives here, 90% of homeowners, owe more on their houses than the properties are worth, as much as 135% more. Speculators who swooped up between 30 and 40% of the homes sold have bailed in droves, leaving empty houses selling for half of what they cost 2 years ago. In August, a major commercial developer went bankrupt, shelving a 140-acre retail, office, and industrial project. So it goes into more of the details. I won't bore you, but essentially this is what happened back in 2008, and now the prices today have come up significantly. They are very, very expensive. So a lot of people, what they're doing is they're saying, well, okay, I can't afford in Palo Alto, I can't afford in San Jose area, so what I'm gonna do is I'm gonna go further out. All right, no problem, no problem. So you have a little commute to work. Okay, so we look out, 20 minutes out. Okay, no way, can't afford it. 30 minutes, can't afford it. 40 minutes, can't afford it. An hour, maybe an hour and a half commute. All right, that's more reasonable. I could do that. So that's what they're doing. They're simply broadening their search, and they're going into further and further communities. And there's nothing wrong with that. I think it's great to live in a place where you're not stifled by what I would call the burdens of a major city. But if you have to then commute an hour, hour and a half, one direction every day, so that's 2 to 3 hours per day commute. I know a lot of people who do that. And, it's just troublesome to think about that. If you lived in the city and worked near the city, that would be excellent. You're getting your home at a more reasonable price. But the point is that people are paying astronomical prices for homes because of speculation, because they're thinking, okay, I can make money off of it, because of everything that's happened with cheap debt. Always go back to the root cause of the problem, and that is easy monetary policies. That's why this is happening today. This is just one example, but I think it is very, very important. And then we look at the stock markets. With all of the potential turmoil that we could experience, the VIX index is essentially heading down towards the level that we saw previous to the huge spike that almost collapsed the market yet again, the VIX. This here is at 12. With everything going on in the news today, you would think this would be very erratic and very much higher than where we see it today, but of course it's not. So who cares? You might as well just put your money all on black. Take the whole house, mortgage it up, throw it all on black. Why not? If you found this video informative, please give me a thumbs up. If you hate my face, hate my voice, hate everything about me, give me a thumbs down. Thank you for that. And if you want the financial education you were not taught in schools on purpose to keep you from knowing the truth, well, these two books, they've got it all. I put everything into this, everything I've learned, the seminars, the books, the audiobooks, thousands and thousands of hours of research involved to put these two books together. You get that at Amazon. The links are in the description. If you're more interested in the audiobook version, you can get that at themoneygps.com.